Hi, Ray Dickey from AssociationHelpNow. Today we're going to talk about the legal and the insurance aspects of the Florida collapse. Before we get started, I just want to recognize the fact that they are still pulling victims from the rubble. We feel for the community down there in Florida. On the other hand, I've had so many requests for a program about this issue that we wanted to go ahead and get the program out. But we do recognize the fact that they're still pulling people out of the rubble down there, which is, it's a real tragedy. Let me have my panel introduce themselves. Dawn?
Hi, I'm Dawn Becker-durnin, and I am a commercial insurance risk management specialist, a CIRMS designee, and I am an insurance agent that specializes in community associations. Our agency is headquartered in Easton, Pennsylvania. However, we write insurance for communities across the entire United States, and I am a fully licensed insurance agent in many states.
And Dave.
Hi, everybody. My name is Dave Byrne. I'm an attorney. I represent homeowners associations, condominium associations, and cooperatives in New Jersey, Pennsylvania, and New York. My law firm is Ansell, Grimm, and Aaron. We have offices in New York, Pennsylvania, and in New Jersey, and I'm the chairperson of the law firm's community associations practice.
So I just want to fill the audience in that this is take two for us. This is such an unbelievably complicated issue that Dawn and Dave literally just had a 45-minute conversation that was way beyond what we're going to have the opportunity to talk to about today. We're going to try to talk about how this relates to if you're a board member or you're a manager, are you covered? If heaven forbid a tragedy happens to your association, are you going to have enough insurance, or could it result in personal financial hardship for yourself? But it is a very, very complicated conversation, right, Dave?
Very complicated. It's very difficult, especially with when professionals we're always worried about our own, obligations to people, and we don't want to leave something out that ends up being the thing that actually causes the problem. And people then say, well, I spoke to him or I spoke to her and nobody said that. Well, we try to avoid it because it's too complicated. So we're sort of always wondering how far we need to go in order to make sure people don't really get hurt by what we miss,
And Dawn, the insurance aspects of this, it's almost like wide open, right? We don't know 100% how this is going to even affect the industry. Somewhat. Ballpark?
Well, that's true. That's true, because here we have an association and relative to this collapse that has $48 million of insurance coverage. And then the question becomes, is that enough, as you stated? And it also becomes from us industry professionals, what questions and what underwriting do we need to do to determine whether a risk is really a viable risk for us? Meaning that are the associations doing what they need to do to protect themselves? Can we insure them?
All right, so I'm going to make a statement, Dawn, and tell me if I'm off base here, or it depends, or whatever, how you need to respond. There's probably not going to be enough insurance to cover the board members, maybe even the manager that was involved in the Florida collapse. Is that accurate?
Yeah, that's accurate relative to this collapse because of the catastrophic nature and the magnitude of the loss of life.
So Dave, I find that pretty scary for board members and managers. And let's stick with board members first. It's a volunteer position. We're going to talk a little bit around the circumstances of what they may have known and not known. But at the end of the day, Dave, these are volunteer board members. And is it an incorrect statement saying that they could be looking at personal financial hardship, maybe even possible financial ruin?
It is scary because even with Dawn's answer, even when every insurance carrier, if there's more than one, even when they push all their chips into the table, meaning the full amounts that are offered, and they offer no defenses or no exclusions or no arguments that insurance companies often make. Many times they have more than the rights to do it. They push all of it in, it still isn't going to be enough. So they're not even going to argue that they shouldn't pay, they're going to say, okay, fine, we'll pay, but here's all of our money, and it's still not going to be enough. Yeah, that's pretty scary. And board members then are left with the corporation, the condominium, to pay their lawyers, to, God forbid, pay their ultimate judgment. But if the condominium is gone, what person's paying assessments to that condominium? Like where's that money come from?
Don't get ahead of me.
I won't.
Let's talk about the insurance part first, and then I think what you're talking about is indemnification, right, Dave?
Yeah, I just want to make sure that it's not like, I know I want to keep it compartmentalized, but one thing, and I know Dawn's seen this too, one thing that we want to make sure board members should not equate insurance with the only thing that protects them. A condominium may have to defend a board member and may have to cover a board member, even if the insurance company is legally allowed to totally ignore it. So it's when you say the board members may not be covered or there may not be enough coverage, that may make people have heart attacks, make them really scared. But without saying, but you might still have coverage or a free lawyer from the condominium itself, that would be like, oh, okay, all right, well, I feel a little better now. I just think people need to understand that it's not like not having enough insurance or not having insurance at all is the only question to ask in a situation like this. That's all.
And I'm not uncomfortable, Dave, that we're kind of like jumping ahead, but we can just go ahead and do that. What good is indemnification though if there's no money there? And that's what we're going to talk about today. But am I off track here with this Florida situation? What good is indemnification if half the building is gone and the rest was demolished and a tremendous amount of 150, I don't know how many owners per unit are no longer alive?
Indemnification, there's a cliche, I'm not even sure what it is, but indemnification is worthless if the person or entity that's indemnifying you doesn't have any money. It is worthless. Generally, though, people would think that a condominium indemnifying you that's a good bet, because condominium not only will already have money, but it is unique in that it has the ability to force people to pay. It's not like a shoe store where, you only have money as long as people keep coming in to buy shoes. You can't force people to buy your shoes. A condominium can force people to pay assessments, and if they don't, you then foreclose on their units or sue them. When the condominium doesn't exist, and people are probably not going to pay assessments, how is a condominium going to force them to pay? Yeah, they can foreclose on me. I lost my unit. I'm not paying your $10,000 special assessment in order to pay for your lawyer. Go ahead and foreclose on my unit. There's nothing there now. So indemnification is not worth anything if there is no one there or nothing there left to actually indemnify you.
In all the years that I've been doing this, I've always looked at it that the boards could always count on indemnification at the end of the day. No matter what happened, the association was always going to indemnify them, whether they got a loan or whether they did assessments. But for the first time, and that I can remember in this industry, I know that I'm rethinking for our board members whether or not they're truly 100% protected. And that's what we're going to talk about today a little bit. And we're not trying to scare people, but I think at the end of the day, we're probably, Dawn, going to try to convince people to take a good look at their insurance policy, correct?
100%. That's critical.
So let me phrase it this way, Dawn. Why isn't there not enough insurance? Can you, why is this community, and let's remember, let me take another step back. This was half the building collapsed, they demolished the rest, but an association could easily run out of insurance, Dawn, if a smaller tragedy took place. Like Dave earlier before we went live brought on a large fire, or heaven forbid a parking deck collapses, or maybe there's a party, 4th of July party, and heaven forbid there's a large loss of life. That could easily exceed the insurance coverage, correct, Dawn?
It can. So the board, as Dave said, they're the risk manager. So one of the ways to transfer risk is through an insurance policy to pay indemnification and defense of those type of claims. So the board should be prudent in researching an agent that is going to review their association and the hazards that present themselves unique to that association. So in this case, a 12-story building is going to represent more of a risk than a 2-story building would. And then we also have the factors of what can the board afford, or what will the board purchase. The board is ultimately tasked with purchasing the limits of insurance. So the insurance agent hopefully is presenting them with options, meaning that a $5 million option, a $10 million option, a $250 million option. And then the board can review and say, well, we feel that we have a great exposure here, being a 12-story building with 136 units. The loss of life here could be tremendous in the event of a fire and our sprinkler systems malfunctioned. Or if there was no fire and the sprinklers malfunction and now we have major property damage. So it's essential that the board meets with the insurance agent and discusses those items. And if they're not, what we say, affordable or within the budget, find out why and what is the price now versus the cost later.
So Dave, I don't know if this is a legal question or an opinion question, but I just want to get it right out of the way. If I'm a board member and the owners are not willing to support the board purchasing enough insurance to cover the association and the board, why would anyone be on a board?
Well, I could come up with a bunch of funny reasons why they'd want to be on a board, but they sit at the head table when the dinner parties come. But I think that you'd have to really ask yourself the question. I think that perhaps a board could, consistent with its fiduciary duty, not buy the gold-plated insurance policies. As long as they've got significant dollars able to do repairs, and they've got professionals who have provided their own opinions that there's no impending catastrophic loss, casualty loss. And even if there is something that's going to happen, you have enough money here to do it quickly, then maybe you could be on a board. But if you're on a board where the owners refuse to pay assessments to an extent that's necessary to make repairs, maintain the building, and or get insurance to cover your butt if you don't do the first two things, you'd have to really think long and hard about being on a board. I mean, you probably would. It'd be very, very, very dangerous to be on a board.
So there's been reports, and I don't know if they're accurate or not, Dave, that many board members had quit, left over the last few years.
I saw some of that, yeah.
It appears over this issue. Just to get it out of the way, the board members that left, disagreed, they're still possibly going to be sued, correct?
Right, and this is the answer is yes, and especially when lawyers are focused not necessarily on liability, who's at fault, but they're focused on tagging as many insurance policies as possible, leaving out whether there's enough insurance or not. But that's sort of the concept. And this is important because this is the difference between, when someone says, well, you can't be sued for that. Well, you can be sued for it, but you'll win. But you can be sued for it. So the board member who resigned because he or she was uncomfortable with the fact that the board or the owners or both refused to either have the right insurance or have enough assessments to do the work, and he or she resigned. That person probably will win the lawsuit, but they'll still be sued, and they won't be able to win. They won't be able to get out of the lawsuit early. They won't be able to file what we call a motion to dismiss, where they argue, judge, listen, no matter what happens here, I'm innocent. You can't possibly find me guilty. The judge is going to say, look, I need to hear some depositions first. I need to see some paperwork first. I probably need a trial to decide whether or not you did in fact resign early enough, whether you did in fact protect yourself. which means although that board member in your hypothetical will win, they will win 2 to 3 years later after they've already defended themselves and potentially paid a lawyer, although it won't necessarily be required that they pay a lawyer. But yeah, they won't be able to get out in the beginning. So there's a big difference between, oh, I got out early enough, I'm innocent, I'll win my lawsuit, but you're still going to be sued. But there's no way to avoid that. There's no way to avoid being sued unless you never step foot in the board seat, or you don't step foot into a seat, unless you never set your bottom down on a board seat. The only way to avoid possibly being a defendant is to never be in the game to begin with.
And what Dave's talking about, Dawn, is we're talking about it's very, very expensive to defend yourself.
Yes.
You know, it doesn't, right at the end of the day, it doesn't matter if you're right or wrong. You're still going to have to pay the attorney. And these fees,
Yes.
as an insurance representative, Dawn, can run into the hundreds of thousands of dollars, correct? And
Absolutely. Absolutely. And the typical D&O claim that we see, the expense paid for defense is an average of $25,000 to $35,000. And those are typical claims that really the owner or the member didn't have authority to bring, but it's got to be argued in court before it's dismissed. I would say that a good 80% of the claims we see are dismissed or are arbitrated even before they get anywhere. And so that factor alone, it's just defense that can be the major expense there.
so Dave, concentrating on the board members, and we're going to talk about the manager aspect a little bit later, concentrating on the board members, they're probably, in this case too, it's going to be astronomical, right? They're going to be getting sued from multiple directions. Is that how it works, Dave, or is it going to work differently?
If the judicial process is allowed to carry itself out in the ordinary course, there are several ways in which that would not happen. But if everything takes place and carries forward as a normal judicial system would, there will be, the losses will be incalculable. Every person who is injured helping to clear the rubble. I mean, no, some people don't always file lawsuits, but under your hypothetical, let's assume everybody does. A person who's hurt when they did when they tried to help save people, that guy's going to sue. The owner who died is going to sue. Well, his estate's going to sue. The owner who is injured is going to sue. The owner who is not injured and who didn't die, but who lost a lot of property is going to sue. Contractors who are not going to get paid for work they're hired to do, they're going to sue. The condominium is going to sue, probably going to sue the engineers who they're going to claim didn't tell them everything was bad, even though they probably did. They're probably going to sue, if they ever had a management company, I understand this particular place is self-managed, but let's say 2 years ago they had a management company. This is where no deed goes unpunished. Let's say they had a management company who decided, this is dangerous. These people don't really want to fund repairs. I don't want to be, God forbid, I don't want to be sued, but I also don't want the police to come in here one day and arrest me for somebody getting injured because nobody did anything. So I'm resigning. I'm going to send a memo. By the way, XYZ management company, we are hereby resigning, and this is why. They're still going to get sued. They're going to get sued. The board's going to sue them. The board's going to sue the insurance company. Board's probably going to sue the insurance professionals who the board will claim did not tell them they didn't have enough insurance, and they'll be countersued. And that's just the beginning of who will sue. It's crazy.
And we haven't even gotten into possible criminal charges, which I understand may be unlikely, but they're already been talking about convening a grand jury, which is a whole other aspect I want to get into. So Dawn, I don't want to get too deep into it, but there's basic insurance policies that associations have. So let's just go through them one by one, and let's kind of take a break in between each one. Start me off with one of the insurance policies that's going to be involved in this situation.
Right. So just to preface this though, insurance requirements will be found within the governing documents of most associations. Further, there are some state laws which, a Condo Act or an HOA Act may also stipulate certain required minimum limits of insurance. But to start off with, the most basic one is commercial general liability insurance, or CGL insurance. That is the third-party lawsuits that an association would receive if somebody tripped or fell in a parking lot and claimed that they were injured. It's also property damage claims. So we see associations that are named when trees fall down on vehicles. And the CGL policy is typically $1 million per occurrence with a $2 million aggregate. So that means that any one claim, the maximum available to the association would be $1 million of liability in an occurrence. So that CGL policy is very important. It's primary protection for the board and the association, the common area.
In this case, that insurance is going to play a role, correct?
Absolutely, because there's bodily injury and there's property damage. What's important to know is that the directors and officers liability does not cover bodily injury or property damage. That's why the CGL policy is going to be paying these claims.
Let's break it down insurance policy by insurance policy for the audience. So you just went to a second insurance policy. We talked about the G&L. The next one is D&O.
Correct. Directors and officers liability.
Is that going to play a role in this kind of tragedy? Okay.
Absolutely. So directors and officers liability is typically $1 million per claim. There is sometimes an aggregate. It could be $1 million or $2 million. And there's usually a self-insured retention where would be either $1,000 per claim. That's the amount that the board is going to have to expend before the insurance carrier is going to start paying the claim. It's usually a very low amount. The directors and officers liability policy should be very comprehensive. It should be a standalone policy, not coupled with that CGL policy, because we find that those bundled policies are very limited and have significant exclusions. So the directors and officers liability policy is there to provide protection for the association, the board, when there have been alleged wrongful acts, a breach of fiduciary duty, failure to maintain, failure to reserve, failure to proxy an election properly.
Is there another insurance policy that may play a role in this?
Absolutely. So the umbrella policy. So an umbrella policy is going to be excess over the commercial general liability and the directors and officers liability insurance. So if those limits of insurance, and I said typically there's $1 million per occurrence with the CGL, there's also typically $1 million with the D&O. If those $1 million limits were exhausted by the insurance company, then the umbrella carrier would then start to pay those claims. So that's excess insurance. So for example, if I have a $5 million umbrella and I have a $1 million CGL policy, I will have a total pot of $6 million for which those bodily injury or property damage claims would be paid that I'm legally obligated to pay.
Okay, and I don't want to get too into it, but there are cases where the insurance company will void those insurance policies if boards act in a certain manner, correct?
Yes. In fact, it's stated on most all insurance policies that fraud would be a result, would void coverage, but also criminal acts are not covered. And typically intentional acts are not covered as well. But we look to the CGL policy, and one would expect if an association knew about a hazardous condition that would result in bodily injury, loss of life, and property damage, that they would correct that matter. Now, and that's why, because we don't want to obviously buy insurance when the building is falling down. That's not what it's there for. It's for fortuitous actions, you know, the sudden and accidental type of claims. So expected and intended injury would not be covered usually.
Dave, there's been reports that there were known issues. You can explain it better, Dave, the terminology that should be used. How is that going to play a role, not only in this case, but in other cases? There were known structural issues. Is that a dereliction of a board's fiduciary duty? Can you explain a little bit about that, Dave?
The answer is probably yes, depending upon the situation. It really does depend on the situation. So it is probably always, a person can probably always argue that a condominium does not have enough money in the bank to pay for things that might happen. It's the difference between like just how people live their lives. You know, some people feel that they need X amount of dollars in their bank account, you know, because you never know what's going to happen. And other people feel like, you know, as long as I have a job, I get a check and I'll be okay. And you know what, God forbid, my mother-in-law's got some money stocked away. You know, this is the kind of thing. So I think boards act the same way. It's like, why do I need to put money in a bank account and charge, you know, X amount of dollars per month in assessments when I could charge a lot less in assessments? And then if something happens, I'll just go to them and charge a special assessment. What makes our property more valuable? What makes it less valuable? Are larger assessments, if larger assessments are better to make sure we have enough money to fix things, but they drive the property values down so that no one wants to buy here, how does that facilitate us having money to make repairs? We have owners that can't pay. We have owners that don't want to live here anymore. That, you know, so it's a balancing act. It's not just, you know, you always have to raise money when there's ever a problem. There's also sort of the macroeconomic kind of thing, which applies even in like with taxation and what governments have to think about. You can always raise taxes on everybody and make them as high as you want, but at some point people will not pay, and therefore you'll get nothing. So if you make assessments too high, even though people legally have to pay, they just won't. And then you'll have, while you got $100 a month while the assessments were this level, when you made them a lot higher, you now not get done. Now you don't get $100 a month, you get $50 a month, because people aren't going to, they're not going to pay part of the assessment. They're going to pay nothing. So fiduciary duty to make sure the building doesn't fall down, but it's not just the fiduciary duty to jam people up with assessments so we always have a lot of money. It's being reasonable. What's our exposure? What do our contractors say? What do our engineers say? What are the values of our homes? Can we charge people more money? When people bought their homes here, they bought them for $300,000. Now I go on Zillow, they're worth $900,000. Our people can pay more money, and our people should pay more money, because just like when they have a car is worth $200, a used car. You don't put a $5,000 new transmission in the car. You get a new car. Right. People make value judgments. So I think the board's got to be reasonable. It's got to consult. And there is one last thing. There is a general, there's a general policy, sort of a concept. This may not help if there's no insurance or the condominium is totally destroyed and there's no money at all. But there's a general concept, which is that board members are a lot less likely to ever have liability, and a condominium is less likely to have liability if it relied upon the advice of professionals. The idea being that, and Dawn used this expression, I think earlier in some form, of sort of offloading your risk, putting your risk where it belongs. I think the law wants to encourage board members to hire lawyers, hire insurance professionals, hire engineers, hire professional management, perhaps. Encourage people to get advice, because the theory is if they get advice, they maybe will make better decisions. And if you get advice, we're going to make it less likely that you'll lose a lawsuit. So there is a benefit for you to, if you have to spend $5,000 on an engineering report, it might suck to spend the $5,000, but if you do, and it turns out the engineer was wrong, it won't be your problem, it'll be the engineer's problem.
But Dave, we can recognize the fact that even if this board ended up doing everything possibly right, at the end of the day, they're still going to find themselves most likely being sued, being in court, and having a tremendous amount of legal expenses. Is that an accurate statement?
Yes, yes. And whether the legal expenses come out of their own pockets will depend upon the nature, scope, terms of the insurance policies that they have. You know, because the condominium may have a legal obligation to pay lawyers to defend a bunch of claims. But if that condominium can successfully force the insurance companies to pay your lawyers, then other than a deductible or a retention, you know, the condominium doesn't pay anything except maybe increased premiums down the road, perhaps.
Right. So we have a situation where let's just assume that the board did everything right. There's not enough insurance, correct, Dawn? They're going to run out of insurance. Now, Dave, this is a disaster. You know, many people have died. The entire building has been demolished. Boards could always feel safe in the fact that they're indemnified, right? At the end of the day, that the association's going to pick up whatever costs they have outside of the insurance. You'll correct me if I'm wrong.
That's true.
What happens where in this particular case, or let's say this happened at a smaller scale somewhere else, heaven forbid, where's the money going to come from, you know, to be indemnified? If it's not there, you can't be indemnified if there's no money available, correct?
You won't be indemnified. You won't be. And that's a huge risk. It should be of concern to board members. Interestingly, if ironic applies, I'm not sure what word applies, but there is a dynamic here, though, that lawyers, plaintiffs and lawyers, will file lawsuits in this concept for money, okay? I mean, sometimes you file lawsuits for things other than money, you know, custody, things that are important to you, having nothing to do with money. You'll pay a lawyer $1 million to keep your child from danger, whether you get the money back or not. But a lot of lawsuits are about money. And if a plaintiff or a lawyer realizes that the board is not going to be indemnified or the condominium doesn't have any money, you'd think that that'll just mean they'll sue and they'll get a judgment and the board members will be exposed because no one will indemnify them. It also could mean that no one's going to sue in the first place, because the plaintiff's lawyer, who you go into his or her office and you say, I got this case, and lawyer's like, well, from what I read in the papers or from what I've known from my buddy down the hall and the other law firm here, the coverage is already out. The condominium doesn't really exist. So you have a really cool claim here, and you probably win $2 million against board member C and D, but board member C and D, I heard, don't have any money. They're retired, they're older. So they have a 401k, maybe a Social Security, but that's exempt from levy. So you have a great case, but they don't have any insurance, they don't have indemnification. So the question is, why would I take your case to sue anyone who I know is never going to pay me? So in a perverse kind of way, the absence of indemnification, the absence of money to pay a lawyer might in some way scare off the plaintiff in the first instance. And that might be an issue as well.
So Dawn, if I'm a volunteer board member, that doesn't make me feel very comfortable. I mean, I understand that's the reality of the situation, Dave, but for me, in my own personal opinion, if I'm a volunteer board member, I don't know if I would be comfortable, you know, with that.
Yeah, with the possibility that lawyers will not decide to sue you because you don't have any money. That's a problem.
So,
but I want to be clear too, and this, because I get this question so often. Well, if I buy a $25 million umbrella policy, does that mean that they're going to sue me for $25 million? And I stated this earlier. We don't know when we get the claim in. Joe Schmo is fallen on the sidewalk, and we've learned later on that he broke his leg and went to the hospital, but now he has back injury, a head injury, and he needs significant medical bills. So the complaint comes in, and that's where we're going to tender to the insurance carrier and say, okay, we already notified you of a claim. Right. Now there's a lawsuit. And that's where they're going to say, okay, we have a discovery period where we want to see your insurance policies. We want to see what limits of insurance are there. That's not typically known when somebody is falling and they hired an attorney.
But in this case, the crazy thing here is it might be well known that there's nothing. But you're right. In a regular situation, you have no idea whether or not it makes sense to sue a board member or not.
Yes.
So Dawn, is it even possible? Can you buy enough insurance to protect yourself in a mass? I'll call it mass casualty incident, right? Because it doesn't have to be a building. It doesn't have to be a building collapse.
Right.
You're having your 4th of July party, and the roof caves in, and dozens of people are injured. That could also easily put you over your insurance. Can associations purchase enough insurance?
So if an insurance So if an insurance agent is qualified, such as a CIRMS designee, such as myself, we will come in and we should be assessing your risk and giving you options to choose. It is going to come down to what are the insurance companies willing to offer, what are the terms and conditions, and what are the pricing. But the most important component is what is the board's willingness to transfer that risk, meaning that if I'm offering them a $25 million umbrella, but their concern is the price of that policy, even though they have that exposure, they may not purchase that limit. They may purchase a $5 million limit because it's less expensive. It doesn't mean that they don't have the exposure. They're only transferring the risk to the insurance company of $5 million.
So what you're saying is a volunteer board member is basically willing to throw the dice in that situation.
Some are, unfortunately.
They're willing to throw the dice at their own personal peril on behalf of the association. That's basically how you're summing that up.
Yeah, and I hate to be so blunt, but I see this all day long. I would say about 85, a very high percentage of the associations we see have either no umbrella policy or very, only $1 million or $5 million. And we see associations that have swimming pools and ponds and playgrounds. Those are high hazard. You should be looking at a $25 million plus umbrella. So it's really going to be of choosing a professional that's going to give you good advice, working with the general counsel for the association, and coming to a level of comfortability.
And Dave, it's okay to go ahead and roll that dice if you're a board member, as long as there's going to be people to provide the funds to indemnify you, correct?
Right, and I think your points are so interesting, because if you break it down like per unit, you're talking about like nothing. So the board member is trying to be a good politician, a guy or a lady who gets their back slapped at the parties and gets invited to all the pool events. And by keeping the taxes low, the assessments low, we all know you get reelected. You're more likely to be a reelected mayor if your taxes are lower than they were the year before, and there's nothing wrong with that. You're more likely to be a successful board member if the owners feel your assessments are reasonable. They can go up a little bit, reasonable. But if you think about it, someone comes to you and says, Dawn says, I think you need a little more insurance. And it's going to be, I don't know, I'm just making up a number. It's going to be another $10,000 this year. And you have 100 units. What's that? $1,000 a unit? $1,000 a unit, right? 10,000 times 1,000 is 100. All right. Anyway, the point is, even if it's $1,000 extra a year, but then you break it down by 12 months. Then you're talking like what? Another $50, $60. You're talking about like. And so what you're doing as a board member, you're the person exposed. So you're taking, in order to save people $60 a month, you're possibly putting yourself out to ruin your life because you don't want to make people pay just a little bit more money. When you break it down by month and by unit, it just oftentimes doesn't seem like it's that much money.
Now, Dave, I don't want to get sidetracked on a whole other topic about indemnification, but theoretically also a board can deny to cover a board member theoretically if they wanted to, right? That board member could take them to court, but indemnification is theoretically you could find the rest of the board saying, you know what, we're not going to indemnify you. Can you just touch upon that a little bit? Am I right? Am I wrong?
No, you're right. But generally speaking, a condominium is unable to, at the outset, refuse a lawyer. It's only when a determination has been made that the board member has done what he or she's been accused of. And that particular thing is so horrific that it would be a bad idea to have the condominium pay, that the condominium will legally be able to not pay. So a board member is accused of, I don't know, sexual assault, God forbid, in the locker room of the gym, and that's the only accusation made. The condominium will probably have to provide a lawyer. Now, at the end, if it turns out that the allegation was in fact true, the condominium can probably avoid paying the damages. And might be able to recover some legal fees, but probably not. But it would probably be able to avoid the indemnification part. Or if there's a settlement made, and this is more where it gets complicated, but if a settlement's made and there's certain disclosures or there's no admission of liability, maybe a board member gets indemnified. But it's only kind of at the end where a board can, a corporation or a condominium can generally avoid the responsibility. And it's almost rare. I think it's almost unheard of that just by the mere allegation itself, that you as a board member could not force your condominium to pay your lawyer. And I think that makes a lot of sense because the allegations are just allegations. They can be totally false.
An interesting aspect also what's going on in Florida, that there's been talk about conveying a grand jury. So Dave, can you just kind of touch upon a little bit why is that coming up? I'm assuming that means criminal charges could possibly be filed against the board, and then we're going to go to Dawn about the insurance aspect. But why? What is that about?
I guess it is. Well, certainly it's about criminal charges. The government can prosecute you criminally after a grand jury indicts you, and it's not unheard of. And it's not, in certain circumstances, it could be appropriate, or there could actually be a crime if a board member, intentionally. It's hard to imagine that this would happen, but I guess it's possible. A board member intentionally takes an engineering report and throws it in the garbage so no one else sees it, and that kind of thing. I mean, look, they're Law and Order episodes. I mean, there are TV shows where the guy who's building a building and who has a crane and he's working and he is texting, and then the crane falls and kills 3 people on the street. I mean, I don't know, that could be criminal or reckless, so that's kind of, I guess, what the government would have to allege here. And I guess it makes a lot of sense to have a grand jury, because the grand jury is going to filter out. I guess if the grand jury decides not to indict, then at least regular people theoretically were brought into a room, were given the information, and they decided that there's no crime, as opposed to government officials deciding not to charge someone. It's people in a jury saying, you know what, this is pretty bad, but we don't think it's a crime.
So Dawn, I don't want to run out of time here, but criminal charges typically are not covered. Is that true?
No, not at all. And so criminal, purposeful intent, knowing things, meaning that you know of what occurred and that it's going to cause damage or further ensuing damage or lawsuits, that can also be excluded from insurance, meaning that you knew about the incident, also not properly reporting, timely reporting, and then, as Dave was stating, being grossly negligent. That is often excluded as well, meaning you knew of the risk and you just decided to keep on going.
But Dawn, this would also, it doesn't matter if you're right or wrong here, right? We're talking about you're going to be out of pocket if you're not being indemnified to defend yourself, right?
Right.
So jumping over to Dave, a lot of what we're talking about here is the legal costs are huge, right? To defend yourself. It doesn't matter if you end up, if the board did absolutely nothing wrong at the end of the day with this particular tragedy, Dave, the legal costs are going to be correct?
Yes, potentially. And this is where I think we talked about at the beginning about the important difference between insurance, the obligations of an insurance company to provide you a lawyer, and the obligations of the condominium to provide you a lawyer. The insurance company may be well within its rights to deny you the lawyer when you are accused of a crime. A grand jury indicts you, you might even get arrested. You get out of bail or you sit in jail, whatever the case may be. The insurance company might be within its rights to deny you the lawyer. Can the condominium, though, deny you the to a lawyer? That's not so clear, and probably the condominium would have to pay for your lawyer if the criminal charges surround your involvement on the board. Because the public policy for that, I think, is pretty. I mean, I think it's important because I think hopefully most people agree with this, but just because the government accuses you of a crime doesn't mean you did it. And it would be really, really horrible if someone on a board was accused of crime and then was unable to, when it was unable to have a lawyer funded, and then had to do it either himself or herself, or had to go pro se without a lawyer or get a public defender. I guess that's what ultimately would happen. You get a public defender, but your liberty's at stake. I mean, you go to prison for that. It's not even about money at that point. So, you know, until you're actually convicted of something, the condominium probably has to give you a lawyer.
So we have a situation here where we know that, or we're assuming, we're pretty confident that there's not enough money insurance-wise, right? Dave, explain in this Florida situation why we're not even 100% sure if there's going to be money left over to indemnify the board members, because the building's gone, and you touched upon it a little bit. Some people just aren't going to pay. People are going to walk away. The owners also hold some responsibility in all this, possibly, correct?
Well, I'm getting feedback. Are you hearing feedback on?
I'm getting it from Dawn for some reason.
Oh.
Go ahead.
Okay. So the owners, yeah, let me answer that first. There is, in many states, there is statutory protection for owners, that owners are not ever responsible for the, mistakes, the negligence of breach of contract of the condominium. But there's also, the condominium might still have a judgment entered against it. And if it has no money to pay the judgment, it'll still be there. There are some states, there's some doctrines, there's a lot of things you'd have to sort of look into more, but that those judgments might become liens on people's houses, on people's units, and they might not be able to sell them because of that. And that would be a real problem for owners. Now, in those same doctrines, those same statutes, there are ways for owners to pay their proportionate share of the judgment in order to sell their home. But that might be useful to you if the judgment's $20,000. I mean, if it's $46 million and your proportionate share is $2 million, I mean, it doesn't really, or $1 million doesn't really help you. So owners do have some potential exposure to that, should there be adverse determinations against a condominium that it doesn't pay. But yeah, it's always been the sort of, as I think we said before, it's always been the understanding that no matter what an insurance company did, a condominium would always have enough money and always have money to pay for a defense or to indemnify someone for a mistake they made. And if it didn't have enough money, it would raise it by just jacking people's assessments up. But as I talked about before, that only works when people are able and or willing to pay the increased assessments. And you can't at all guarantee that's going to happen here. So, in fact, one would argue it may not. Now, what's funny, not funny, haha, again, but I don't know, this is interesting. I mean, some people have in their own HO6 policies, they have like assessment coverage, right? Or they have, right? So maybe a condominium, maybe like a condominium increases everyone's assessments, and then everybody's smart enough to go to their policies to get their HO6 policy to get the money. Maybe that's what they do. But even that's not a bottomless pit.
No, and I do want to clarify real quick that the HO6 policy, which is what a condominium and some town homeowners have, it's not a homeowner's policy where you're in a single family home, but it's typically liability, smaller limits, and it's inclusive of your contents and any improvements or upgrades or betterments that you've made to your unit. So there is some coverage available if you are apportioned a portion of the deductible, for example, after a fire, and you've received a loss assessment of $1,000 relative to the $10,000 deductible the association has, you can then submit that invoice for $1,000 to your HO6 carrier and ask them to reimburse.
But Dawn, that's not going to help our board members.
Unfortunately not. And if it's not if it's an excluded claim, that
and I don't want to get sidetracked, Dave, because we're going to run out of time, but go ahead. What were you going to say?
No, I was going to say real quick. It only helps in that you go to your question. If a board member needs to be defended and indemnified, and the insurance company is not in play, and the condominium doesn't have any money to do it, the board member's stuck. But if the condominium can raise the money, the board member's not stuck. If the condominium can raise the money by raising people's assessments, and even if they don't want to pay, or they can't pay, they can then take that notice of assessment and send it to their HO6 insurance. Their HO6 insurance might actually pay that. So as a strategic move, a board could say, you know, we have the ability to raise assessments to the extent of everyone's HO6 coverage for this. So people, even if people refuse to pay us, they might make claims. Now, I don't know that a condominium can make a direct claim against the HO6, probably not, but it does provide a strategy that might allow them to raise some money, which you'd only look into if you're the board member who's being sued and you need some money to pay your lawyer. You would try to be creative and try to figure out a way to do that.
All right. So before we run out of time, let's talk about the manager aspect. Now, I believe this building was self-managed. Dave, just briefly explain if it makes a difference if it was self-managed compared if it was managed by a management company, because are managers indemnified if it's
yeah, well, an employee is even more. I think the relevance of employee versus separate or outside management company is not necessarily like a liability thing, because either way, the employee is your agent. So as you know, the issue though might be it's one. If you have an outside managing agent, especially one that's significant, although it may not have a legal obligation, it may not be. This goes to your indemnification question. The management company that's an outside management company will be sued in this type of dynamic we're talking about. The management company will then take that complaint and then take its contract with you and say, hey, you're supposed to indemnify and defend me. Then you go, yeah, sounds good, but I don't have any money. And so that management company then has money. So they might have to pay a claim. They might have to go to their own insurance. And their insurance company will probably say, well, we don't have insurance for this. And then the management company will say, I know we don't, but we're going to sue you, and so you should pay. The point is, having the management company does provide some possible recovery for you, even though you contractually have promised to indemnify them if they're sued. Because again, if you have no money to indemnify the management company, your indemnification promise is meaningless. So having a management company, especially a large one, would potentially provide some safety for owners or people that are injured, when an employee would definitely not. And that is, that would conceivably be a reason to have an outside management company to again, move your liability to people where it's best situated, and as opposed to an employee where you're taking on all the responsibility as an employer for everything the employee does.
Transfer that risk.
Right. So Dawn, what Dave is saying, if you have a management company, in this case, it may have been advantageous because there's another bucket of money you can go after, because you're not going to go after the individual manager. Is that correct?
Possibly, yes, but Dave brought up a very good point. There's often indemnification with contracts that the association has with the management company.
But if the association is not going to make good on that indemnification, though, the management company is still going to go to their insurance company anyway, correct?
Yes, right. I mean, it's the same as the roofing contractor that doesn't have any insurance when they fall.
Has no choice. The ABC management company is still a defendant in a lawsuit. So if it goes to get indemnification from the condo and there's no condo, it doesn't get to be like, well, I have a contract, so you can't sue me. The plaintiff's going to say, I can sue you. That's your problem. So you still have a complaint with your name on it as ABC management company. You have to figure out what to do with it. Right. Because you're not going out of business, even though your one building fell down. You have clients, you have customers in Arizona and Michigan and all kinds of other places.
Dave, we really don't have time for you to really dive too deep into this, but can an HOA go bankrupt in this case? Just walk away.
That's a really difficult question, and bankruptcy law. I don't know. The answer is I don't know. I have one experience with a condominium that attempted to file bankruptcy and it did not go well. It wasn't a client of mine, but I'm aware of it. And it was a condominium that did need to go into bankruptcy. It had very, very poor owners and a lot of exposure from oil tanks and all kinds of really awful things. They never could have paid. And the bankruptcy didn't go well because basically the bankruptcy trustees just forced the people to pay assessments in order to pay off all the creditors, which the condominium could have done itself. You know what I mean? So
Right.
I don't know that the bankruptcy gets you anywhere, except to maybe discharge debts. But not all debts are discharged. You can't discharge a debt just because you filed bankruptcy. Some you have to pay still. So it's complicated.
So Dawn, I'm going to give you 2 minutes here to kind of just, which is not a lot of time, summarize a little bit of advice here for the audience. Really kind of have to keep it to 2 minutes because I want to give Dave time also, and I want to wrap up.
So what's really important, what I've been getting the most out of this situation as far as looking at it behind the scenes, is that it's really important to listen to your professionals and to heed their advice. And insurance is one method of transferring the risk. So if you're going to self-insure, make sure you have money in the reserves to do so. And we're seeing an example of this case, a very poorly funded association, and therefore also very perhaps poorly insured with very low limit for their exposure. So it is prudent for boards to meet with their insurance agents, discuss the insurance program before the renewal. And if you're going to evaluate anything, evaluate coverage. What are you purchasing and what are you getting for this price of the insurance program?
So Dave, I also would like you to summarize in about 2 minutes too, if you could. But I do have a question for you, Dave. And same question for Dawn. Has this situation made you rethink? Did this take you by surprise as much as it has taken a lot of people by surprise? I'll just stick with Dave on this. Is this, are we going to go into new territory based on this collapse?
Yeah, I think yes. It made me think of a bunch of different things. One of them is what we talked about earlier off the program, was that it's to some extent sometimes a loss is so massive, and I don't mean personally, obviously, but I mean just like it's just so huge that the lawsuits are not even worth discussing because they'll never be finished. There'll never be enough lawyers. The courthouse can't possibly handle them all. And people's lives are just going to be inundated with litigation. It's just, and so in a situation like that, what often happens is there is a government solution. There is a government fund. There is a program that's created where people will waive their rights to sue, and then they will be able to file claims with a public fund. So I don't know this, I'm no expert on it, but there are, like, earthquakes and floods, and I mean, there are just some things that just are so massive that the regular sort of talk about indemnifications and policies and fiduciary duties, they just don't really work anymore because they're just, the system isn't just created, it's not able to handle this kind of thing. And so it's made me think about the fact that there's like a sweet spot, that there are the types of things we see all the time where we have been trained to advise clients, and we've been trained to protect ourselves, and then there are things that really cannot even be they can be imagined. A building, there could be an earthquake, a building could fall down, and it's happened before. But the legal consequences of it cannot be handled through anything other than a massive sort of government takeover of the horror. And I think that means that it's almost like, do you need to have $300 million of insurance? Do you need to have $600 million of insurance? Because even if you do, it still may not be enough. And even if you have a $500 million policy, the system may not allow everyone to file lawsuits. The system is not going to allow 3,000 lawsuits or 5,000 lawsuits by individual people. It's just not going to happen. The system will crumble, and therefore the government, the people, will probably just sort of take the problem and make it a government solution. So that's something I hadn't really thought of as much with this. But once a problem is so big, it almost is so big that people that have been trained to talk about these things are not even really in play anymore, and it just is way out of our hands.
I want to thank you both for being here. I know there was just so much we could have gone into. I mean, we spoke almost an hour before we went live, and I wish we had enough time to have the audience even just listen into that conversation, because there were just so many different aspects of how this could turn out.
Like
Thank
the
you.
outtakes, the webinar outtakes, they call them, right? Or some bloopers.
We'll work on that, actually. Dawn, thank you for being here.
Thank
David,
you.
thank you for being here.
Thank
And
you.
good luck for everyone in Florida. And the story is, I'm sure, to be continued. I'm sure there'll be more news about it. Thank
Yeah.
you.